Oh, good morning. My name's William Woodring. We apologize for the technical difficulties with some communication. We have as panelists Dion Roberts, myself, Paul Webster is on the line, and we have Lucy Cook and Matt Bennett from our office. Next slide, please. Just a couple housekeeping issues before we get started. All the callers will be muted. You may ask a question by raising your hand button on your screen. You'll be recognized when we have the time for questions. We allow your questions after each of the sections. We have a spot in the middle that will take some questions. And there'll be some time at the end. We're anticipating to answer questions as well. Unfortunately, we're not able to take chat questions, so would just please, those of you that are on the audio or in the chat, if you'd send an email with your question to M. Bennett, that's M as in Mary, B as in boy, E as in Edward, N as in next, N as in next, E as in Edward, T as Tom, T as Tom, at tinc.org, which is there on your screen. Next screen, please. I have introduced myself, and Dion Roberts is with me. We're both from Training and Development Associates, and Paul Webster from HUD is also available. What we're covering in this webinar is the financial management and accounting. We have, we'll touch on record keeping, and a topic that we think will all be interesting is, as the participants, is the monitoring section. We will take questions at the end of each of the sections. Next screen, please.
William, can you hear me?
I can. Oh, there's Dion. I can hear you.
Hi, Dion. Perfect. Okay. Hi.
So we do have Dion by voice as well. Please say hello to us. The first portion that we'd like to cover is the financial management. And as all of you well know, that we must use sound financial management, and we also need to look at the bigger picture. Obviously, the recipients of the grants have to follow the uniform administrative requirements. There are some common rules for the running the programs, and those are specified in the OMB circulars and in the other regulations, which we'll touch on, and of course you can always reference those. You're also reminded that the grantees must follow the circulars, and the grantees must follow the circulars and any other circulars that are out there, which might, regulation, which might include Davis-Bacon or the Lead-Based Paint Act, women and minority business enterprises, equal opportunity and equal employment opportunity, and that's, but again, you are reminded that not only you as the grantee, but the sub-grantees are required to follow these circulars. Next slide, please. There are a couple areas of application for the circulars. The uniform administrative requirements for state and local governments are found at the in the OMB Circular A-102, and also admin and additional issues are covered in the 20 CRF Part 85. The cost for state and local governments are administered through the OMB Circular A-87, and also portions of it in CRF Part 225 there in your slides. For recipients and subrecipients and grantees that are not for profit, those that are tax exempt, they'll follow the for administrative rules OMB Circular A-110 and the 24 CRF Part 84, and your cost regulations are found in the OMB Circular A-122 with additional reference in 2 CFR Part 230. Again, those are all in the in your slide. Next, please. as guidance for financial administration, just remember that there are minimum standards that have to be followed for managing the grants. Obviously, we're looking for internal controls. Those are the controls that are going to safeguard the assets of the grantee or the sub-grantee. They control the assets, funds, and property and other assets. You're responsible for identifying the source of the funds that you're using and the uses of those federal funds. That's obviously needs to be done in an accounting system. You must follow timely and accurate, complete financial reporting, and your financial system should make sure that you have the ability to create reports as well as budgets, because your actual to budget variances are going to be one of the significant measurements for the financial system. We want to make sure that whenever you're transferring funds, the accounting system is in place and handles that transfer so that there's a minimum amount of time between those funds being transferred from the federal to the grantee, and that, of course, is called cash management, and that can be handled in a variety of functions. Next slide, please. In the area of internal controls, again, that's to safeguard the assets of the entity. You need to have a combination of policies and procedures in place that does safeguard those. You want to be sure that positions and job functions are clearly delineated, that there's a division of duties, that the person handling the cash is a different person from that's recording the cash, and of course, person or part of those internal controls. You want to make sure that you have adequate timesheets, good records, time accounting. Allocations are really going to be important for personnel and costs, so you want to make sure that you have those within the accounting system so that you're creating accountability. The funds in the internal control that are used and managed by the entity is safeguarded by those internal controls. Reminded that it's the entity's responsibility to show that NSP funds and that the public body has obtained high quality goods and services at the lowest possible price, and that's one of the functions of the internal control system, as well as the policy procedures and then the accounting system. Just checking into the accounting system, of course, it's a system that tracks the sources and uses of funds. And of course, in a governmental agency subdivision, we're using fund accounting. GAAP, generally accepted principles, always overrule and are guide principle. And these areas or these systems just create a method to group resources and group some funds, which we'll touch on in just a bit more. We want to make sure that program income and the program costs are also accounted for in a good, orderly, timely kept, contemporaneous record. We want to make sure that we know what period the obligation is being incurred or obligated against, whether that obligation is actually paid. So in the accounting world, that's called payable and disbursements. We want to make sure that the items that we're buying, goods and services, that the items that we expend money for the particular program, and we account for it. And we want to make sure that the grant that's within that program is accounted for, and the activities, both income and expenses, are accounted for in that grant. And of course, everything within the internal control is regulated and driven by a proper approval by all of the officials up and down the line. So when we're looking at internal controls, we're also looking at approvals for all of those. Ooh, that was interesting. For all of those expenses. That came up fairly slowly, didn't it? The accounting system is very similar to the CDBG system. It obviously has to include chart of accounts, a listing of the account numbers and account names and the balances. It is required to have a cash receipts journal for inflow of monies. It should have a cash disbursements journal for the outflows of money. May have a warrants journal or a payables journal to record a payroll journal to record the labor and services for our internal people, and then a system to bring that together, all of these what we call source journals together in one accounting system called the general ledger. That's kind of the accounting 101. If we need to go into more, we'll do that. Fund accounting, we want to spend a little bit of time because there is we've some questions about that, and Paul has forewarned us that there are some issues out there. Fund accounting, as opposed to program income accounting, fund accounting is all-encompassing. Your program income is for just one specific area. For instance, the CDBG that you see on your slide, or the home funds, or NSP, general funds, other fees, those are all programs, but the fund accounting brings all of it together. So within each of the programs, or the vertical columns that you see, we need to keep track of what's in the very first column, which are revenues and the source of those revenues, whether it be from grant, appropriations, collections, or whatever source. This isn't expected to be all-inclusive, as you see down in the expense side of it. We typically call this a source and use, the source of funds, and then the expenses are the use of the funds. So how do we use those funds for project or activities and administration? So the sources and the uses then give us what excess revenue, and we do expect it to be excess revenue, or at least if we're really, really good, we break even. So the fund accounting, again, is to be all-inclusive. So the columns that you see there are not necessarily all-inclusive, and we don't suggest that any stretch of the imagination. There's state and local funds that also some program funds, or the new market tax credits, low-income housing tax credits, etc. So all of those make up the fund accounting, so that we group it together and we keep track of it by each of those specific programs. Next slide, please.
We do have 4 questions at this point, and I'm wondering if we wanted to take a quick
yes, let's do that.
And answer some of those questions.
That'd be terrific. Let's try that.
Okay. First, I'd like to just make a technical adjustment here. Paul Webster, can you hear us, and can you speak to us?
Well, I can hear you fine. Can you hear me?
Oh, and we can hear you, so that's good news. Thank you. Okay, the first hand up is Bill Mandeville. Bill, if you'd like to ask your question. Bill, are you with us? Okay. Moving on then to Lucille. Do you have a question? Okay. Let's try. Evidently, our people who wanted to ask questions have changed their minds. So, William, you want to continue on?
Sure. I'm just curious if there's that video portion, if we could open up Why don't you click one of the panelists and see if we can say hello to them. See if they can hear us. Or if they can speak in.
Check.
Well, this is Paul Webster. Let me go back to the issue of in the discussion of fund accounting for a moment. This applies generally to governmental, particularly to governmental entities and some nonprofit entities that might be sub-recipients. The concept of fund accounting really is really inherent in governmental accounting, and the idea background
Looks like we've got some music playing that's actually
is to segregate the assets and revenues and expenditures and liabilities for particular purposes so that there's greater likelihood that the funds are used for authorized purposes. And it's not uncommon under the CDBG program, for example, which NSP is really a part, for governmental grantees to set up a separate fund, which is really a separate accounting, budgeting entity. And usually it's the kind of fund that's established. There are different kinds of funds, like the general fund. Sometimes there are capital projects funds. But the kind of fund that's usually set up for a grant program is called special revenue fund. And so if a grantee has a specific grant, then that grant can be accounted for under a separate special revenue fund or whatever is permissible. And that increases the likelihood that the grantee will be able then to meet the financial management standards in the that OMB has established that are in our, as William said earlier, Part 84 and Part 85. So because the funds are accounted for separately, the expenditures are accounted for separately, the revenues that are generated are accounted for separately, and so there's usually a greater likelihood that the published, and it's possible that a grantee could establish or could account for the use of the grant funds under the general fund or some other fund that's already been established. But it's sometimes helpful, particularly for separate special purpose kinds of grants like neighborhood stabilization, to set up a separate fund whenever possible. Nonprofit entities, the concept of fund accounting is not as extensive in a lot of nonprofit entities. So oftentimes separate funds are established, but oftentimes they're not, and that's not a violation one way or the other. It just means that if you do have a system that doesn't use fund accounting, then you can you really just have to make sure that whatever the system you have that you're using meets the standards in Part 84 and Part 85, particularly as regards identifying adequately the source and application of the funds.
Okay, we have a few more questions. If we can try to connect with them, if that's okay. Mary Monteith. For some reason, we are having a technical difficulty with our audio, with our participants. We will continue to work on it, and if we can continue the presentation, we will make time for questions as soon as we get it resolved. I'm sorry.
Thank you. Lucy, if you would take us back to the one of the screens with Matt's email, then if you have a question, you can email Matt Bennett at TDA. It's screen number 2, Lucy. We'll flash that the second slide up that has Matt's address, that you can then use that to forward your questions to Matt, and he'll get those plugged into us so that we can make sure that we answer those for you. And it's Matt Bennett at tdainc.org. I'm sorry, not Matt, M. Bennett, B-E-N-N-E-T-T, at tdainc.org. There we go. Right there at the bottom, M. Bennett at tdainc.org. And if you forward your questions through to Matt by email, we'll make sure we do get all of your questions answered. Fun part, budgeting. We've been familiar with budgets for quite some time. They are very important portion of our internal controls as well as our accounting, because at some point we've guessed or estimated what we thought we might have for source revenues, sources, and what we would expend that money on or the use. And we've created a budget at some point in time that, through the approval process, will be used to keep control over those funds and keep us accountable and within our budget ranges. Of course, the record keeping and the internal control system and the accounting system is designed to keep track of those budgets and keep the records so that the sources and the uses are allocated against the same budget category that we had set up. And again, we would like to recommend to be consistent, to make sure that with whatever category you budgeted an item, that's the category that you charge it against, as well as being consistent with staying within the same category each and every time that you have that type of expenditure. Budget's designed to compare your obligations and the expenditures that you've anticipated and planned for, and it's a roadmap for us to identify how we're doing from beginning to end, and kind of gives us a map on how well we're accelerating through the process and whether we're on target, off target, or a little bit behind. Obviously, those deviations are the part that we manage, so we're looking at the budget and the plan to be our roadmap, and then our actuals tell us how well we're doing staying on the road plan. In another arena, we always said, to plan your work and then work your plan, and the budget gives you that opportunity to do that. What this is really doing is ensuring that the grantee, and remember that's also the subrecipients, are held accountable for the anticipated results. They're expected to accomplish certain things, and the budget tells us how well we've done staying next to that accomplishment or next to our plan. Again, we're using the OMB circulars for guidance in how we allocate costs and how we push costs. They're referenced in the financial management standards. We also have it in some other records that or some other standards that we're required to maintain. But basically, what the three overriding components that are explained in those standards are the cost allowability, whether the cost is reasonable, and then cost allocations. Other circulars like HERA and Housing and Economic Recovery Act, and perhaps some state programs that will also need to be administered for these funds, and relate to allocations. And if we're using multiple funds, we're also using home funds as well as the NSP fund, we will need to do some allocations on that. And for instance, if you had a 10 units that you were going to rehab, 4 of those units were NSP and 6 of them were with home funds, then you'll need to do an allocation between the 40%, 60%, 4-to-6 ratio, and the home funds rules would apply specifically to just those 6 home funds properties, and the NSP rules would apply to the 4 NSP rules in that example. We'll get more into cost and allocations in the next slides. Costs are well defined, and so you want to make sure that you have those manuals available to you. They're eligible if they're associated with and particularly eligible client, subclient, subgrantee. They pay for eligible activities that are part of the program. You want to make sure that in your documentation that you're delineating all of those costs towards particular line items, and that they're part of the original grant application, because remember, that was your plan that you submitted for approval. You want to make sure that you have adequate documentation of each of those expenditures or sources of funds. You need contracts in place. You'll want to keep a good filing system. Any and all documentation that would be available to support and supplement your the cost. And the standards go along, and you're obligated to meet whether they're allowable, reasonable, and if there's a proper allocation. Next slide, please. I'm getting a note here that we should allow chat because of the auto difficulties. And I would recommend that we do that. If I could have a brief sidebar with Lucy. I think if we could open up the chat feature, maybe we can catch some questions.
Okay, and I will do that, and I think I might have audio back if you can bear with me and we can try it one more time.
Okay.
Mary Monteith, are you with us? Mary? No. No. We'll take the chat questions. I'm sorry.
I apologize for that. We will try to get through all the questions through chat now. Again, you're reminded to take advantage of the Matt Bennett at tdinc.org's email, and we'll go ahead now. See if we have any emails, Matt. Okay. Let's go ahead and continue, and we'll try to get plenty of time at the end then for any questions, email or chat, or if we can get the audio resolved by then. Allowable cost delineated in any in the OMBs, they have to be necessary and reasonable. Obviously, accomplishing your plan, accomplishing moving forward with meeting some of the national directives. They allowable to the program that you're within, if you're using home dollars or to be D dollars or NSP dollars. Obviously, they have to be authorized, and again, this is part of that internal control. And with the authorization, you're reminded here on the slide that they have to be authorized or otherwise not prohibited. They have to conform to the rules and the requirements of the specific program or of your plan or of your policy procedures that you've established. So you'll also be doing the allowability based on the rules that you might be following. An example of that might be if you have an internal control that says any check over $5,000 has to have dual signature, and so they would have to meet those requirements. And of course, we want to make sure that the charges that are allocated aren't charged to any other programs, or in fact simply stated that they're single-use application to a particular program. Next slide, please. I would say that some of the states and some of the green activities would also provide a stricter requirement than what some of the OMBs may have. So we do have to follow the stricter rule, whether it's be state or city or local or a program objective. For cost to be reasonable, we have to look at whether it's an ordinary and necessary cost. Things that come up, your source documentation are going to be the driving force on that. Market sometimes helps us with comparable goods and services to determine whether cost is reasonable and necessary. And then for the benefit, that shows us whether it's directly related to that grant. So benefit to the individuals or the program activity, that creates a reasonableness, even if there may be a little bit of just variance in whether it's the cheap or the least expensive at the market price, or if it's a benefit to the particular program. Deviations generally are not favorable or not desirable, so any of those deviations from the associated practices generally are going to be considered unreasonable cost. However, if you feel that they are reasonable costs, they're ordinary and necessary, but maybe not supported by some of the other markets or lower pricing, then make sure that you document your reasons, have plenty of information in your records and in your filing system that will give you information that you can share with him, with the auditors or the monitors. For HUD, a cost costs allocated to the HUD program, we want to make sure that those are consistent and treated consistently with similar costs and similar programs. They have to be specific to that program, specific to the purpose, specific to the budget, and all the benefits from the program have to be distributed on some reasonable, rational basis. So we want to make sure that you have adequate steps, adequate documentation, adequate procedures in place that demonstrate that it's necessary to the operation, necessary to the program, and necessary for your accomplishment of the goal of your particular program. Next slide, please. Speak for just a minute about direct and indirect costs. Then we're going to be taking some questions before we move forward into the next section. hopefully we'll take this question. Direct costs are those that are specifically identified to a program or to an activity, and those are pretty standard and pretty self-explanatory. Indirect costs, however, are those that have some allocation or some assignment or different information attached to them. And those might be administrative salaries, where the administration works across several programs, so we'll be looking at applications based on those and how many programs those go to, and is that a particular program reasonable. Again, accounting expenses, the maintenance of the accounting system, as well as just even the software for the accounting system is important. And so much of our support, administrative support, falls in that, as well as our own maintenance people or facilities people. These generally get allocated across a variety of programs, and so we'll want to take a look at those indirect costs and the allocation. So again, keep time records, keep good allocations, keep good policies and procedures, and have those all documented within your files to make sure that you're making sure that you've got everything in place. This concludes this section. Before we move to record keeping, I'd like to ask Paul if he'd like to weigh in or be on.
Yeah. Let me just
and we have some questions I can read also.
Well, okay, go ahead.
Okay. Again, we apologize for technical difficulties. The first question is coming from Rebecca Jones. It is, in case of NSP, it's not really a question, statement. In case of NSP, we will not have a specific client until after rehab. So I don't know if that gives you enough information to answer the question. Let me go to the next one.
Okay.
Okay. What about costs that are part of TDC but may not be allowable as an OMB cost? Can those still count towards the total development cost of the project?
Well, this is Paul Webster. If the costs are going to be paid with NSP funds, then the costs have to be allowable under and meet all of the standards under the OMB cost principles. So the answer insofar as costs paid with NSP funds is concerned is that, yes, they must be consistent with A87 or A122, as the case may be. If, however, you're looking at the concept of total development costs more broadly, where you have a project with components, some of the components are funded with NSP funds, some are not, there really isn't any restriction on the kinds of costs that could be included in total development costs if they're not going to be paid with NSP funds. So that, I hope that answers the question.
Okay. The next question is an email question. If I have to buy some software to meet the reporting requirements of the grant, does that cost become part of the indirect cost pool, or can I charge 100% of the cost of the software to the grant because I would not have purchased the software otherwise? Does the answer to this question change if the software can be used and is for other non-NSP programs?
Right. If the software is purchased exclusively for use on the NSP program, then no, it does not have to be included in an indirect cost pool. But I'm not quite sure I got the second part of that question. If the if the software is used for other purposes that benefit the grantee or the subrecipient who's administering the activity of the program, then by definition that is a joint cost. That means that's a cost that benefits more than one program or activity. So in that case, it would have to be included in the indirect cost pool. So it just depends on what the purpose of the software is, whether it benefits only the NSP program or not. If it does, it doesn't have to be included in the in an indirect cost pool. If it does, if it benefits more than just the NSP program, then it does have to be included in the pool.
Okay, thank you. A follow-up question to that from another participant is, how about new computer equipment for current and new staff administering the NSP program?
Same answer. If it's used exclusively for NSP, then it can be paid for with NSP funds. If it does not, then it would have to be included in an indirect cost pool. And let me just elaborate on that a little bit. Normally, when you have an asset that has an economic life, that is a useful life, that extends beyond the life of the NSP program, or any grant program really, then the total cost of that equipment is not usually charged to the program at one time, but rather the program recovers, or the grantee recovers, those costs that are allocable to the NSP program by charging a depreciation or use charge for that equipment. So if you have equipment that has a useful life that is extends beyond the period during which the NSP program would be carried out, then that should not be expensed all at once, but rather should be treated like an asset, and that asset's cost will be allocated over each period through the use of a either depreciation method or a use charge as permitted under A87 and A 122.
Okay, thank you. The next question is, we are working with nonprofit developers who will be taking a developer fee of 10% of the project cost. Do we require that they demonstrate the same level cost accounting to how they use their developer fee?
That's a very good question. The developers who receive funds from an NSP grantee to carry out a rehabilitation project, where, for example, they might acquire foreclosed property and for rehabilitation, or they might just use NSP funds solely for the rehabilitation portion, or they might do both. Those entities are not subject to the OMB circulars. So they're not required to, all of their costs are not required to, and they're not required to develop an indirect cost allocation proposal or anything like that. However, the grantee, when it decides how much money it will provide to the developer to carry out the project, is subject to the cost principle. So it wants to make sure that the costs that it provides to the developers are necessary and reasonable, and that the amount of the fee that's charged is necessary and reasonable. So grantees really should be requiring developers to justify the level of the developer's fees, and also to provide support for the cost that they're paying for property, such as if they acquire property, usually they would want to have that supported by an appraisal or some other estimate of value that would establish that the amount is reasonable. And if they're carrying out a construction project, then if it's a very large construction project, then the grantee should have some sort of analysis of the cost of that project to make sure that they're reasonable. But that entity is not itself subject to these circulars, so it does not have to develop the same kind of and comply with the same kind of principle or standards that the grantee or subrecipient would.
Okay, thank you. We have two definition questions. I'll ask them together because they're pretty short. The first is clarification about the difference between NSP1 and NSP2, and then the next is the difference between a developer and a sub-recipient.
Well, NSP1 and NSP2, they were authorized under different laws. NSP1 under HERA, Housing Economic Recovery Act, and the NSP2 program was authorized under the Recovery Act that was passed last year. So that's they come under two different programs, but they do share, and of course the distribution of funds for NSP1 was through a formula. The NSP2 funds were awarded through a competition, so that's a major difference. But in terms of the kinds of activities that can be carried out and the rules that apply to those activities, they're largely the same for both the NSP1 and NSP2 programs. So the eligible uses are the same under both programs, and the discount requirements for acquisitions are the same under both programs. So the rules of the game as far as what can be paid for with the NSP funds are basically the same under both programs. But the way grantees got the money and was a big difference, and there are certain requirements that go along with a grantee being selected through a competitive process. They're subject to certain, and they're subject to standards as far as use of the money that's different, that would be different. For example, under the NSP1 program, funds have to be obligated within 18 months. Under the NSP2 program, you're mainly looking at expenditures over a somewhat longer period. So the measurement standards for use of funds are different. Now, as far as the difference between I think the question was the difference between a developer and a subrecipient. I commend to you all the guidance that we posted on our NSP website on obligations, because it does have in that guidance a definition really of a subrecipient and a description of the a subrecipient, but and a developer, I should say. So basically, there's that's the best place to go to get something in writing on this. But just briefly, a developer is an entity that's carrying out a housing rehabilitation project through assistance provided from a grantee or a subrecipient of a grantee, or it's carrying out new housing construction with assistance from a grantee or a subrecipient of a grantee. The entity can be a has to be a private entity, but it can be a nonprofit or a for-profit entity. So just because it's a nonprofit entity doesn't mean it has to be treated as a subrecipient. It could be treated as a developer so long as it's carrying out the activities that I described, housing rehab or new housing construction. Developers are not subject, as I mentioned earlier, are not subject to the same OMB and requirements that a grantee or subrecipient would be subject to, such as under Part 84 or Part 85. They're not subject to the cost principles under A87 or A122. A subrecipient is an entity that you have to take some pains to distinguish between a subrecipient and a contractor. If a grantee just hires somebody to perform construction work, for example, on a project, but it's on property that that the grantee owns, the entity that's doing the work is simply a contractor whose services should be procured in accordance with the procurement requirements applicable to the grantee or the subrecipient. If, on the other hand, the entity is a true developer, it will have site control on the property. So this entity would usually be acquiring an interest in the property in its name and would be developing the property for its use, such as for uses for rental to income-eligible tenants, or it would be acquiring the property for ultimate resale to someone else after it completes the acquisition and rehab and other development work. In the case of new construction, it would be new construction on a site that met the NSP standards. So the main distinction that people have to make is it carried out under, does the project involve either rehabilitation or new housing construction, and does this entity have site control of the property that it acquires or it develops? In those cases, then usually that entity can be treated as a developer. Remember, though, it has to be a private entity. It can't be a unit of government, for example.
Okay, thank you. Let's take just two more questions, and then we will get back to our presentation. What closing costs can we count in initial NSP property acquisitions?
What closing costs? Well, any of the costs that that are usual customary costs associated with the acquisition of property in the area where the property is being acquired. So if there are fees to be paid to third parties, then those fees can be paid. If there are taxes, in some cases taxes might have to be paid. But really it would be any of the costs that are usual and customary for in connection with acquisitions in the area where the property is being acquired.
Okay, thank you. And next, currently we are using QuickBooks for our accounting software. Is this a sufficient software for HUD grants?
Well, it could be. It depends on how complex the grantee or the subrecipient's program is. But the main thing, again, is to make sure that the standards in Part 85 and Part 84 for financial management systems are being met. One of the things that you would have to be, for example, that you would have to look at is whether or not the software package would permit the recording of an obligation, or it might be called under the software package, it might be called an encumbrance, or it might be called a commitment, but it would have to meet the definition of obligation under our rules, because grantees have to maintain records of obligations that are incurred, particularly NSP1 grantees, because they have to be able to demonstrate at the end of the 18-month period that they've obligated an amount for NSP activities that's at least equal to the amount of the grant awarded to them. So the software package would have to be able to pick up obligations, but you know, the system doesn't have to be, the software doesn't have to be complicated. It doesn't have to be expensive, as long as it shows and it meets the standards under the Part 84, Part 85. In particular, a focus on the source and application of funds. So you have to show that the system should indicate the revenues that are received from NSP through the grant, any program income that is received, generated by an NSP activity. On the application side, it should show the activities that are being undertaken. The activities should be labeled by the eligibility categories under NSP 1 and also the eligibility categories under the CDBG regulations, so that you would know, could be able to quickly demonstrate to an auditor or to a HUD monitor that the activity is eligible, and the use for which is being, the funds are being applied is one of the eligible uses under the NSP program. But otherwise, you know, it certainly could be used, and Quicken does have programs, I think, for nonprofit organizations, and they could probably be conformed to the needs of the NSP program.
Okay, why don't we go back to the presentation and continue, and then we will have plenty of time at the end to try to get to all these questions.
Could I interrupt just one more time? This is Paul Webster again. I wanted to go back on the OMB cost principles, because I want to make clear that that when a grantee incurs a cost that benefits more than just the NSP program, and for example, if the grantee is carrying out another federally funded grant program, or a state-funded grant program, or just a function that it's carrying out with revenues that it receives from other sources, and a cost is incurred that benefits all of these functions, then almost always that's going to require a cost allocation plan to be developed. And if you're a governmental grantee and you have a cognizant federal agency assigned to you, then you would have to submit it to that agency. If you don't have one assigned to you, then you're not required to submit it unless the agency that provides preponderance of funding requires it to be submitted. If you're a nonprofit organization, the indirect cost proposal really has to be submitted in all cases. So, but if you have a cost that has a common, that jointly benefits more than one, the technical term is cost objective, but that means activities or different programs, then you're going to have a cost allocation plan to support the distribution of those costs. And the common joint costs are utilities, the rent you might pay on an office building where the staff have space to administer these various programs. Sometimes the salaries of the individuals, they can't be allocated on a direct basis, so they will have to be charged as indirect costs. So the key is to identify those costs that have a benefit that extends beyond the the NSP program, and that is often the case with grantees that are governmental entities that administer the regular CDBG program or have other functions that they carry out. Okay, so that's all I wanted to interject at this point.
Thank you, Paul. We're going to go into record keeping. The purpose of the accounting system and the record keeping, of course, is to enable HUD or the auditors to determine if the funds, NSP, home program, any of the other fund requirements have been met. So those are all evidenced by the records. There will be, as you're all aware, there are the quarterly reporting requirements that have to be posted up 30 days after the end of the quarter, and your quarterly report has to be posted on your website so that it's shared with the local citizens. Record keeping is really designed so that we can document that we've taken adequate necessary steps to monitor the project, that we've taken normal and prudent business steps to monitor our partners, and that we have records to substantiate both of ourselves and within our subrecipients. And so all of that comes within this record keeping, and it requires a very good and timely kept filing system. And this that you see now is speaking to those filing systems and how long we would need to keep records for purposes. And as you see it, we're required to keep records for 3 years from the date of the submission of our final report. Okay? After the final report is submitted, then we'll want to hold on to those records. And the records obviously are all general ledgers, the subsidiary ledgers, all the financial records, the filing system supporting all of your documents, any of the statistics that you had both in the formulation of your plan as well as the conclusion of your plan, and any and all. And this is kind of a redundant statement, but any and all records pertinent to this award. You want to keep those for a minimum of 3 years. Now, there are a few exceptions to that 3-year rule, and those are related to litigation. Next slide, please. If we're in litigation or some kind of financial claim, or if there's an audit that's started before the expiration of that 3-year period, then retention requirement is extended beyond until all the litigation and everything is resolved. Whatever claim, audit finding, litigation, you want to keep records until everything has been resolved. Those purchases or acquisitions for real property and equipment, which we classically refer to as fixed assets, those have to be retained for 3 years until after the final disposition as well. So your fixed assets for real property and equipment that are used, that are with those federal funds, have to be kept longer than the 3 years if it's appropriate. And then all of your indirect cost allocations and those proposals, each of those have separate timekeeping requirements, which you can refer to the OMBs about for those record retentions. As a rule of thumb, what you're looking at is holding the record until they're no longer required, and then you hold them for an additional 3 years. And just be mindful of those other exceptions and avoid litigation if all possible. Lucy had several other questions. We'll take a couple of those, and then we'll move into the monitoring next.
Okay, thank you. Next question is, we are working with nonprofit developers who will be taking a developer fee of 10% of the project cost. Do we require that they demonstrate this same level cost accounting to how they use their developer fee?
I think we answered that question earlier.
I'm sorry.
Yeah.
So let's not answer it again. Let me try the next one. Can the administrative funding under NSP be used to cover indirect costs of the program as a whole, i.e. legal costs for loan documents, marketing costs for the homes?
Well, first of all, the grantee, if it has indirect costs, can charge, must charge those costs pursuant to a cost allocation plan. That plan, if it's it may be required to be approved. In some cases, it may not be required to be approved, but it has to be on file and ready for review and audit if requested by the federal agency having responsibility for that entity. So the cost has to be paid in accordance with, has to be charged in accordance with that plan. If the grantee, if it charges indirect costs and a portion of those indirect costs are allocable to the NSP program, it really has the option of charging those indirect costs as general admin, that is, costs that would be subject to the 10% cap, or if it develops a plan that identifies individual activities as benefiting cost objectives, then it can allocate those indirect costs to the activity, individual activity, so it would not be subject, the cost, all of the indirect costs would not be subject to the 10% cap. But it would require the grantee to develop an indirect cost allocation plan and have a methodology that allows it to allocate costs to individual activities as opposed to just the NSP program as a whole. If the costs are just allocated to the NSP program as a whole, then they're going to be, of necessity, it will have to be charged as general admin expenses. Can you read the last part of the question again to make sure I'm covering everything?
I wish I could, but it has deleted.
Okay.
All right. Let's go to the next one.
A reference to legal costs and other kinds of costs. Normally, if legal costs associated, for example, with acquisitions and other kinds of costs that are specifically related to individual activities can be charged as activity delivery costs, not as general admin costs. And if they can be specifically identified with the activities, they don't have to be treated as indirect costs.
Okay. One more question, and maybe two, and then we'll go on with our presentation. Next question is, we are a nonprofit in receipt of the state's NSP grant. We are acquiring and rehabbing properties. Are staff overhead, i.e. occupancy expenses for activity delivery, allowable under the NSP program?
Occupancy expenses like space, cost of the space is what I'm assuming. Yes, that's a cost that can be charged to the NSP program either on a direct or an indirect basis, depending upon, again, whether that cost jointly benefits more than one program or function. If it's more than just NSP, then it's an indirect cost. If it's just the NSP program, then it's a cost of the NSP program and can be charged, and usually it would be charged as a general admin expense.
Okay, thank you. Are non-development contractors subject to the same OMB circular rules?
Non-development contractors. if you're talking about a contractor that was procured in accordance with the OMB requirements, that is on a competitive basis, by either a grantee or a subrecipient, then the costs that the contractor incurs are not subject to A87 or A122, although there are certain cases where, under the procurement rules, where the grantee or the subrecipient that's conducting the procurement, that is selecting a contractor, will have to perform a cost analysis of the funds, of the services that are being procured. In that case, then the grantee would have to utilize the cost principles under A87 or A122 to perform that analysis. But otherwise, a contractor procured in accordance with the OMB requirements is not itself subject to the OMB cost principles or the other administrative requirements. If you're talking about a developer as opposed to a contractor, remember, a developer is an entity that's a private, for-profit or non-profit entity that's carrying out either housing rehab or new construction and has site control of the property. Those entities are not subject to the OMB cost principles themselves, but as I said earlier, the grantee has to maintain documentation of how it determined that the cost that the assistance is providing is necessary and reasonable. So usually that would require the grantee to get some supporting information from the developer in order to adequately document the reasonableness of the cost.
Okay, why don't we start back with our presentation, and then we'll have time at the end for the remainder of the questions. Thank you.
Okay, hi everybody, this is Dion Roberts. We're going to spend the next little bit talking about monitoring. And I know for a lot of folks, especially those who are NSC1 grantees, this is something that more and more grantees are really starting to focus on. So we wanted to just take an opportunity to talk about what the requirements are and what some of the tools are that HUD has already made available and that you can access to help you in designing your monitoring for NSP so that it works in terms of ensuring compliance with both statutory and regulatory requirements. Obviously, why we monitor? Well, HUD monitors you, and in turn, there is an expectation that grantees monitor their subrecipients and other partners. And so obviously you want to make sure that before HUD is coming to visit you, that everything that you and your subrecipients and partners are doing is reflective of the statutory and regulatory environment that we're operating in. And so you want to be aware of what's going on with folks and understand that not only are you monitoring the folks that you're funding, but there is a potential that when HUD comes to monitor you, they can also choose to do direct monitoring with your funding recipients. And so part of your role is to make sure that all of the funds that you're being provided, whether being managed directly by yourself or by a subrecipient or developer, are being adequately managed and all of the requirements are being met. And obviously, if there are problems and they can't be resolved, then sanctions can sometimes be imposed. And we'll talk about the 3 levels of sanctions and how that usually works in terms of what's a low-level issue and then what really rises to larger cause for concern. In terms of responsibility, again, your responsibility is to make sure that you and your subrecipients and partners are complying and that you're achieving your objectives both on time and on budget. And so what you'll notice when you look at the monitoring resources in a little while is that one of the considerations relates directly to progress. And for NSP, that's even more important than in some of the other programs because the time frames are just so short that you have much less flexibility than you might have in some of your other funding sources in terms of both obligation and expenditure requirements. And so you really want to be making sure that timeliness is at the top of that list for you. And it's really meant to offer support and ongoing assistance to the folks that are spending the money. You want to make sure that they have a clear understanding of what they need to be doing so that they're not doing something accidentally wrong, or they're not doing something just because they don't realize that it's a requirement. So when we talk about monitoring visits, and there's really a couple of different things here, because what you probably do when you're looking at monitoring is you're making a decision on the front end based upon what you know about your subrecipients and partners, about whether they are high risk or low risk, and whether or not that is going to result in that particular year in them receiving a desk monitoring, where essentially you're monitoring their files from your office, and so there are certain things that you can look at from your office and certain things that you can't. Or if they're actually going to receive a visit from you where you're going out and working on site to review their program. And the key distinction is not only location, but if you're doing a desk monitoring, there are certain files that for confidentiality reasons, you're generally not going to ask your subrecipients or partners to provide to you. You don't want boxes full of beneficiaries' personal information sort of being trucked back and forth in the back of somebody's car. The risk of that information being lost or being lost track of is just too great. And so generally, if you're going to do a desk monitoring, you're looking at organizational level information. You're looking at audits. You're looking at financial reports. You may be looking at backup documentation for reimbursement requests that they've provided to you and those kinds of things. But you're usually not going to be looking at participant eligibility because of the confidential nature of some of that information, and you just don't want to risk those files being misplaced through any sort of travel process. So that is one of the pieces of information that you would look at on site that you probably wouldn't look at if you actually were doing a desk review. That said, if you're going to go on site, obviously you want to be prepared. You want to know before you go in there what you want to see from them, what you think they're doing, in other words, what is in your written agreement with them, what they have reported to you in terms of their progress when they've requested payment, and what the rules are that they're supposed to be following. In other words, are they doing a home buyer program? Are they doing AC rehab resale? Which part of the NSP program is applicable to what they're doing? And you're going to see in the monitoring guide that it really breaks it out. And so you have to have an understanding of what they're doing so that you can make sure that you're monitoring for the right things. So you prepare, then you go on site. You've sent them a notice ahead of time. We like to say that a month's notice is a good courtesy to make sure that they have time to get prepared and not only just sort of review their files and make sure they're ready, but also, frankly, to make sure that they are scheduled to be available to you if you need information from them. You can show up a week, with a week's notice if you need to, but it just makes it tough for folks who are already trying to run their own programs. And as people who also get monitored, no one understands that better than you do. And so we really encourage you to try and get out ahead of it, let them know that you're coming, and let them know what you're going to be looking at so that they can have the right information available for you when you get there, and you don't end up losing time while they are pulling information from you. You hold an insurance conference, please make sure it's with the chief official, and we say that because you really want to make sure that the folks who are the responsible party, the people who are signing the documents, know that you're there, know what you're there to look at, and have an opportunity to ask any questions that they might have, and have a sense of the fact that you're doing this in partnership and to strengthen their program. And so you really want to make sure that that initial entry as well as the exit meeting includes the highest level folks within that organization. Obviously, you're going to do the audit, and as you do that, you're going to document what you need and what you're finding. There are checklists that we will go over in a moment that are available to you, and you can use those as a guide. And then you hold your exit conference. You want to give, just as you would want to have, an opportunity to review your results and to give feedback. And there are lots of instances where an exit conference can actually result in a modification of the finding or a reduction in the concern, depending upon if there was a misunderstanding or if they can immediately provide you with the piece of information you were looking for. So you want to make sure that before you leave, they have a sense of what's going to be in the letter that they receive from you. You don't want folks to sort of be blindsided by what they end up receiving in the mail. And then you follow up. You send that letter. We say you always start with the good stuff. If there were certain aspects of your review that really made them shine, point those out as well, and then point out any findings or concerns. And most importantly, make sure that you're giving them a time frame for response. Not just here's what we found, but perhaps, we would like to have your response to how you're going to address these findings or concerns at our office within 30 days. So you want to make sure that you're giving them a deadline so that you have a time frame in which to follow up with them. So it's not just for them, it's also for you. Just a couple of notes in terms of things that you should be looking at. Obviously, you need to bring the regulations and notices with you in case you have a question. Next slide, please. So anybody who does monitoring should put together a notebook beforehand that includes all of your reference materials. Because what you'll see is that the checklist will refer back to regulatory citations or other citations of specific requirements, but it just gives you the citation. So sometimes you may need to go back and read the actual language, and you want to be able to have that available to you when you're there so that you remember the context in which you had the question, because otherwise, if you wait until you get back to the office to go read it, you're having a hard time remembering at that point what was actually in the file that you were trying to make a decision about. So you want to have your own notebook of all of your source materials. You want to have a copy of your written agreement with them with you so that you can go back and refer back to what they agreed to do, right? What was their scope of work, what was their budget, what was their timeline. You want to have whatever forms and checklists you're using. And you want to have any other information related to them, whether it is what their organizational structure is or other pieces of information that you may need. You're going to be looking at their project files. So if they're doing an acquisition, for example, let's just take acquisition, you're going to be looking at their purchase and sales agreement. You're going to be looking at whatever they did in terms of inspections. You're going to be looking at the title. You're going to be looking at all of those things, their environmentals, that would be part of that acquisition process to make sure that everything is in there and that they followed the steps appropriately, that the environmental was done in a timely fashion that didn't result in any sort of choice-limiting action. So those kinds of things. You're also going to be looking financially at their payment requests and vouchers. So you're going to be saying, if you reimburse them for something, you're going to be now tracking back what is their backup documentation to verify those expenses. And some of that they may have submitted back to you when they initially submitted the reimbursement request, and some of it you may have told them to hold in their own office and to expect to be monitored on when you came to visit. So you want to be looking at that. And you also want to, in advance, look at past monitoring files. Now, obviously this year, since this would probably be their first NSP monitoring, they're not going to have a previous NSP monitoring. So you're not going to have a previous NSP monitoring file to look at. But you may be working with organizations that you've previously funded through other grant programs. They may have gotten CDBG in the past. They may have gotten home funding previously. And if you have access to that information, you want to look at those monitorings to get a sense of, were there any organizational capacity issues that, even though it's a different funding source, might still be there for NSP. Okay. So those are the key documents that you're going to look at. And I just want to, why don't we do this? Why don't we stop for 2 or 3 questions, and then we'll talk about HUD's monitoring handbook and the specific NSP pieces to that they've recently put out and how you can use those. So Lucy, do we have any questions?
We sure do. First question comes from Michelle Starrett. We are working with a nonprofit. We are the grantee and subject to CFR Part 85. Are they then subject to CFR 84? These are different requirements. I'm trying to put the correct citation into our contract.
They are, if they are acting as a subrecipient, then they would be subject to Part 84 and OMB Circular A122.
Okay, thank you. Could you please give an example of how the grantee should treat program income?
Well, first of all, when a grantee undertakes an activity and that activity generates program income or generates a cash payback, then that's required to be recorded on the grantee's books as program income. And the general rule is that when the cash is received by the grantee, then it becomes part of the NSP program and has to be used to pay for the next, has to be used to pay for any costs that are pending or that are coming up before a further withdrawal is made through DRGR from the grant account. In other words, you use the program income cash on hand before you make any further withdrawals from NSP grant funds through DRGR. And that would be anything that would be in the grantee's approved program, any activity that has a cost to be paid, you use that program income for that.
Okay, thank you. Next question is, for failed acquisitions in which due diligence costs will be paid by NSP, Kentucky requires documentation of unit eligibility at the time at which expenses were incurred, as well as verification of expenses such as appraisals, boundary surveys, etc. Is any further documentation required for failed acquisitions?
Well, first of all, the grantee should be maintaining documentation for the costs that were incurred, whether they are failed or not. And if the acquisition is failed, meaning that you initiated the acquisition process for a project, you may have incurred something like appraisal costs for appraisal expenses or something like that, then that documentation has to be maintained. But then you just have to indicate in your files what happened, why the acquisition did not, why it wasn't completed, and the circumstances. Basically, just maintain a narrative, put a narrative description in your records that would indicate what happened, why the acquisition was not consummated, and then and maintain documentation, again, for all of the costs, as you would for a cost associated with or related to an acquisition that was consummated.
Okay, one more. Are water and sewer connection and capacity fees allowed to be paid by NSP funds in a new construction where the fee is directly attributed to a specific address and not to fund an entire development?
Can you repeat the question, please?
Happy to. Are water and sewer connection and capacity fees allowed to be paid by NSP funds in a new construction where the fee is directly attributed to a specific address and not to fund an entire development?
You know, I'm going to have to punt on that one. I think that's a good question to submit to our NSP question box, and I really don't know whether this issue has been addressed or not, so I don't want to take a chance on a webinar and provide an answer that we've already considered and for a reason that I might not be aware of said that it was not allowable. So I think that question should be put into the NSP question box, and then we'll get a response back to you. Sorry about that.
Okay, and we'll show that link at the end of the presentation. Okay, Dion?
Great. If we could go ahead and go to the next slide. We want to talk for just a moment about if you're going to be undertaking monitoring, what are some of the resources that are available to you, especially given the short time frame for the NSP program. There are a lot of grantees who very commonsensically don't really want to reinvent the wheel and don't want to have to come up with from scratch an entire monitoring approach. And so HUD has provided, I believe about 2 months ago now, an addendum or a revised version of their CPD monitoring handbook. And the link to that is on the bottom of this slide. But if you've never seen the handbook before, it essentially provides a separate chapter for each of the community planning and development programs. So it includes a chapter for home, it includes a chapter for CDBG, and it now includes a chapter for the recovery programs, which is Chapter 8. So next slide, please. So what you see is under Chapter 8 in the economic recovery programs, there are two specific parts of that chapter that speak to NSP. One is specific to NSP 1 and the second to NSP 2. And within that chapter, that 8-4 and 8-5 are essentially overviews of the requirements. And so it gives you a sense of what the expectations are in terms of what requirements you should be monitoring for when you're going out and monitoring with your subrecipients and your developers and partners. The other thing that you get provided is below the actual narrative are a number of exhibits that relate specifically to the different economic recovery programs. And 8-10 through 8-17 are specific to NSP. Now, some of them relate specifically to state programs. 8-17 is specific for NSP 2, but it provides you with resources that outline what you need to monitor for NSP related to program progress, as I mentioned earlier, related to national objective, and a number of other things. What you'll see when you go in and take a look at this, which I know you're going to do just the minute this webinar is over, is that very often what it does is, again, rather than reinvent the wheel, it gives you the NSP overlay, and then it refers you back to Chapter 3 and exhibits within Chapter 3, which is the CDBG chapter, that relate to that specific issue. So, for example, if you go back later on, not while I'm talking, and you take a look at Exhibit 8-11, which is the Guide for Review of NSP 1 National Objective of Benefit to Low, Moderate, and Middle Income Persons. You'll see that it provides you with an overview It talks about the fact that for NSP, middle income persons are eligible as opposed to CDBG, and it gives you that overlay. And then it refers you back to the specific exhibits within Chapter 3 that relate to each possible national objective, so that you can use those checklists to go down and do your monitoring and make sure that that information is there. And so these exhibits are not a complete recap of everything, but where the CDBG resource already exists, what it does is it refers you to that resource. And it's important to know that because we encourage you to take these checklists with you when you go to monitor. So you want to make sure that you've printed out all of the relevant checklists, not just the ones necessarily in Chapter 8, but whatever ones are going to apply out of Chapter 3, which is, again, the CDBG chapter. As you go down the list, what you find is that there are some questions, or it's just a question, and it asks you to state your basis for conclusion. And then there are others where it asks you a question, and it's a yes or no question, and there is a regulatory citation next to that. And where there's a regulatory citation and you can't check next, you can't say yes to it, you can't say yes, they are doing this, then that is automatically a finding. There are other things that you may see that may cause you concern, but if there is a regulatory citation or statutory citation next to that requirement, then it's going to be a finding. And so we really encourage you to use the checklist or to modify them for your own use so that you can get a sense of, as you're working your way through the monitoring visit, what are the things that they might be having challenges with that are of concern and that you would like to see them, enhance, and then what are the things that they really absolutely must fix and that you're going to have to address with them in terms of corrective action. So when we're talking about corrective actions, next slide please, as I said earlier, there are essentially 3 levels. There are the low-level things which usually are not yet problems, but are things that could become problems if they're not addressed. So it's a lack of internal control that has not led to any misappropriation of funds or anything like that. Next slide, please. But if it's not resolved, then potentially it could lead to that kind of issue in the future. So you have those lower level concerns that you want them to address. Can you go back, please? We need to be at the previous slide. Back. There we go. Okay, the second level is moderate level, and these are the types of things that might cause you out of concern to restrict payments, to say, okay, from now on when you submit reimbursement requests, we want this additional level of documentation provided in order to consider payment. Or we're going to require you to submit monthly so that you don't just send us a 5-inch binder and then we feel pressed and have a hard time feeling like we're meeting due diligence. It could also cause you to disallow expenses, to require repayment from them. But essentially a moderate level is something that is fundamentally wrong that must be corrected. But if they correct it, and if you sort of, tighten control on them for a while, they have an opportunity to pull it together and continue to run their program. The final level of corrective action, high level, are the things that are so egregious or really put you as the grantee at such risk that you feel like you have to suspend them or take away their money, and in some instances actually initiate legal action. And very often that's not necessarily initiated by you, but it's your organization referring the information to whoever the appropriate legal entity is within your community. And sometimes, depending upon the nature of it, you would provide that to your city attorney. If you're a local unit of government that's a city, and then they might share that information with the prosecuting district attorney or those kinds of things. But you're not actually taking legal action, but you're referring it to the folks who can make an educated legal decision about what level it rises to. And so it's not an instance of everybody gets the same outcome from a monitoring. You have one thing wrong, and no matter what it is, here's what happens. It's really dependent upon what the concerns and findings are that come out of it. But ultimately, at the end of the day, you are looking for production. No one goes into a monitoring wanting to find things wrong or having to wanting to have to stop a program. Especially with NSP, you want to find ways to help them be productive, to meet their timeliness, to meet their budgets, while also complying with the requirements, because one without the other just means repayment. So you don't want to get into a situation where they have great production, but they're going to end up having to pay all of that money back because they're spending those funds out of compliance with the requirements. Monitoring should obviously result in responsiveness to community needs, an effective use of the resources, and really hopefully strengthening the organization for the future. The goal is to build capacity, not just to go in and find reasons for them potentially not to get funding, but to help them build the capacity so that potentially in the future they might be even more successful with accessing resources because they've demonstrated that their organization has the capacity to be able to expend them in a way that is in compliance and meets the community's needs. That is pretty much all there is for the formal presentation. Lucy, do we want to go ahead and take some more questions if there are any out there?
Oh, there certainly are. We have about 15 minutes left and a few questions. First one, if eligible NSP costs were dispersed from local NSP grant accounts but not drawn from DRGR, and if program income is received prior to the time of a draw from DRGR, must these costs be drawn as program income, or can they stay charged to and drawn from DRGR as grant funds?
Well, if the basic, again, I'll just repeat the basic rule. If you have costs to be paid and you have cash on hand from program income, then that money will have to be used before a grant funds are withdrawn through DRGR. Now in this particular case, I think the questioner indicated the funds were paid with local funds, but and so if the grantee wants to reimburse itself for those costs and program income is on hand, it has to be used before grants are drawn down through DRGR.
Okay, thank you. Paul said, general admin for overhead. However, if staff are being charged to activity delivery, then should their overhead, base costs, etc., be allocated to delivery?
If there are overhead costs associated with a specific activity, then they can be charged as an activity delivery cost under that activity.
Okay, thank you. Does NSP provide advance notice when reviews, monitors occur? If so, how many days in advance?
Are you talking about HUD providing advance notice?
NSP HUD.
Yeah. Well, usually the monitoring would be done by a field office, and they would get in touch with a grantee before monitoring that grantee. Now, as far as the any further review or monitoring by a grantee of a subrecipient, that's a decision that the grantee will have to make.
Okay. Is there a definition of timeliness?
Definition of timeliness for what purpose?
Paul, I think I referred to timeliness in terms of one of the things that you were monitoring for, and at least in the way that I was speaking of it, it related to are they timely as it relates to what is laid out in their written agreement.
Yeah.
So that was the context of my remark. I don't know if they're talking about something else.
No. Yeah. I don't think there's a definition per se in the for timeliness, meaning we have timeliness requirements under the general CDBG program for using grant funds, but that's really not applicable to NSP. So you're talking about is the subrecipient in this case timely in its use of the funds? That's really something that the grantee should identify in its and provide for in its agreement with the subrecipient, providing benchmarks for accomplishments and outcomes, but HUD doesn't prescribe that per se. Except that remember that there are different deadlines for using funds, both under NSP 2 and NSP 1. So you want to make sure that you've captured in your subrecipient agreements with other entities these requirements so that you can enforce timely use of funds by the subrecipient, so that you're not in noncompliance with the requirements under the general program.
Okay. Here's a question with a couple of layers. For rental property, for applicants or existing residents to income qualify, are we required to obtain third-party verification on income and assets? And also they want to know, will HUD be visiting and review the resident files on a yearly basis?
Well, on the latter part, no, HUD has no policy at this time, at least, on something like that. What was the first part of the question again?
For rental property, for applicants or existing residents to income qualify, are we required to obtain third-party verification on income and assets?
Again, this is a question you might want to put into the NSP question box, but I don't believe there's any requirement for third-party verification. But there, it's a matter of your comfort with what you have in the way of documentation of the income. In some cases, that might be an advisable documentation to have, but I don't believe there's any requirement for that. But if it is a question that a grantee really needs to get answered, I would put it into the question box.
Okay. Can you please give an example of a high-level corrective action?
I'll let Dion answer that, since she's the expert on.
Sure. So a high-level corrective action would be one that results in potentially your terminating their project, and usually, unless it's particularly egregious or really is breaking not just a rule but a law, in most instances it is 2 or 3 years in the making, where you have monitored them repeatedly and are finding that they have this issue multiple times. But if it's only once, it could be things. So let me give you an example. I'll give you an example. That would work. So you are, or your developer or your partner is found to be misappropriating federal funds, not due to a misunderstanding of eligible use, but misappropriation in the strongest sense of the term. In other words, the money is simply disappearing. You are paying for rental development, and HUD believes the NSP rental development is 20 units. And you get out on site, or HUD comes out on site and discovers that it's 5 after the money has been spent. So it's really not about the small things. It's a high-level corrective action takes place when there's some fundamental waste, fraud, or abuse that's taking place that's above and beyond folks simply getting something wrong in a file or miscalculating one participant's income eligibility. It rises much higher than that.
Yeah, let me just add that obviously the first thing you want to do is to take any action that prevents a continuation of the problem that you've discovered, so that you don't allow a problem to be compounded by further misuse of funds. And then, depending on the circumstances, you may have to seek legal action. You may have to call in the authorities in your jurisdiction. You may find it so serious that you want HUD to be made aware of it, and HUD may want to see our own Inspector General go in and review what the situation is. So it just depends on the circumstances, but one of the first things you want to be sure of is that you don't allow a continuation. So if it requires you to cut off funding, then you should do that after consultation with your counsel, legal counsel.
That's a good point, Paul.
Okay. Next question. If you do an on-site and have discovered issues, what is okay to copy for your file to support this? Just as you don't want to have beneficiary data being transported for desk monitoring, how does the documentation stay in our files as backup? Would it be acceptable to ask them to forward an electronic version of the file instead of sending a physical file?
For monitoring purposes, yeah, of course. I mean, again, it depends what the agreement is between the grantee and the subrecipient. But if there may be situations where the grantee asks for additional information, and that information could be furnished in an electronic format.
Okay. Will HUD use the existing definition of findings and concerns per Chapter 2 of the CPD Monitoring Handbook, and will HUD use 570.910 of the CDBG regs regarding corrective remedial actions?
Well, I would have to go back again, maybe beyond those. You may probably be more familiar with the monitoring the changes to the handbook than I am at this point, but absent anything that I'm aware of, we would use the same definition that we use for other programs. What was the second part of the question again?
Will HUD use 570.910 of the CDBG regs regarding corrective remedial actions?
You know, we haven't gotten to that point yet, and that's a policy issue we'll have to take. It is, of course, an option available to HUD, but that's going to depend on that's an issue that really hasn't gotten totally resolved yet as to exactly what policy we'll implement on corrective actions and what provisions we would utilize in doing that.
Okay. Next question. Did I hear someone say that the federal reports must be posted on the grantee's website in addition to the recovery site?
The question was, are you supposed to post your quarterly report to the grantee's website? The answer is yes.
Okay. Could you give an example of a program delivery cost that would be program delivery versus administration?
Yeah, a grantee is carrying out a rehab activity, and it has to do inspections of the rehab work, and it utilizes its own staff to perform those inspections. Then as long as the cost associated or the time that is spent on that inspection is documented, then that can be an activity delivery cost. It would not have to be treated as a general administrative cost of the program.
Okay. I'm afraid that we have no more time for questions. We had about 2 or 3 left, but unless we can take a couple more.
As far as I'm concerned, we can take a couple more, yeah.
Here's a quick one. How often should a grantee monitor a NSP sub-grantee?
Well, again, that's up to the grantee. Really, we don't prescribe a certain frequency, but it should be, and really in the grantee's self-interest, it should be as frequent as necessary to provide the grantee with some assurance that what assistance was provided to the subrecipient is being used in accordance with the requirements. And there are ways to get monitoring or ways to get information from a subrecipient that wouldn't necessarily involve an on-site visit. So, reports that were submitted either on a recurring basis or an ad hoc basis would be another way to get information that would enable a grantee to make some determinations as to whether or not the subrecipient is performing in accordance with the subrecipient agreement. But we don't prescribe, HUD doesn't prescribe any certain frequency of monitoring.
Okay, one last question. Can interest accrued on property purchases awaiting reimbursement from state grantee be included in soft costs? If they exceed 20% of the purchase price, can sub-grantee request reimbursement?
Interest accruals on what exactly? That would be the question. If the
property purchases awaiting reimbursement from the state grantee.
If the issue is whether or not the grantee can charge, or a subrecipient can charge interest expense that it incurs in connection with carrying out an activity, the answer to that generally is no, because the grantee has the ability to pay the grantee on the subrecipient on a timely basis to carry out the activity. So, generally speaking, interest is not on something like that is not allowable. But there are certain situations under the circulars where interest might be allowable. So it would depend on the circumstances. So if a grantee has a specific case that and has the circumstances, can describe the circumstances to us, then it can get in touch with HUD, and it can get in touch with me directly if it wishes to find out whether or not interest would be allowable under those particular circumstances. But generally speaking, interest does not get charged as part of the activity delivery costs because somebody has not paid the grantee or subrecipient on a timely basis. The grantee really is responsible for getting funds to the grantee when needed to carry out the purposes of the program. But again, there may be certain situations where there may be exceptions to that depending on the circumstances. So we can look at those individual cases if necessary.
Great. Thank you very much, Paul. We're going to go ahead and wrap up for the afternoon. I just want to thank again our presenters, William Woodring and Paul Webster, for participating in this, as well as the more than 375 folks who joined us this afternoon. So there was a great turnout. And if you need any additional help, we encourage you to go to the website where you can ask a question and you can also request technical assistance. That is that first link, the HUD-NSP-help.info. And then we really ask you to complete the SurveyMonkey survey at the link that's listed there as well. You'll get an email in a few days also asking you to do that. And it's important that we be able to provide HUD with feedback on whether or not this was helpful, as well as what other topic areas you might want to see covered in the future. So we really encourage you to use that opportunity for feedback and hopefully to use these webinars. And a couple of the slide presentation for this webinar is already up on the NSP website, and in a few days there will also be an audio recording there as well as a transcript. So if you have colleagues who are not able to attend, you can encourage them to take a look at those tools as well. Is there anything else that anybody would like to say wrapping up this afternoon?
Nope. Again, we apologize for technical difficulties, but hopefully will not happen again.
All right. Everybody have a wonderful afternoon, and thank you so much for joining us.
Thank you.